Hey traders, David Frost, LazyGapTrader.com. In this video, I'm going to show you an example of a home run trade from this morning, one of our morning gap trades that worked out picture perfect. Not only picture perfect, but worked out to the penny. You're getting a sneak peek of it on the screen now. It was obviously Wells Fargo. The level was $53.63. The stock hit that number to the penny and took a rocket ride higher. However, what I want to do also is explain a little bit what this gap trading strategy is all about. As day traders, we need opportunity. We need stocks to be moving primarily at the opening bell. That's when prime time trading occurs. Right now, today really marks the beginning of earnings season. So for the next several weeks, really couple of months, the trades are going to come fast and furious. As companies report earnings, it creates movement in the stock. Whether it's up or down, we don't care. As day traders, the opportunity exists when we can identify a specific price level where these stocks will first be drawn to like a magnet and then have a price reaction from in the other direction. In my course at LazyGapTrader.com, traders learn everything they need to know in order to trade the gaps successfully. Which stocks does it work the best with? What type of volume criteria do we look for? How much of a gap higher or lower in the morning do we look for? How do you trade these stocks specifically? Which ones are still valid at the time price comes into the target area and which ones are not? That's very, very important. How do you squeeze as much profit out of these stocks as possible? I have an entire video module in the course that describes exactly how to do that. And here's the holy grail. Traders who take the course learn how to calculate and come up with these specific price levels where the stocks will first be drawn to and have that price reaction in the other direction. These are the high probability trades without a shadow of a doubt. And there's so much more found in the course that helps traders find success trading the gaps each and every morning. And it's not just in earnings season when these occur. We get gap trades just about every single trading day of the year. It's just during earnings season, they come fast and furious. These are days when we may get 2, 3, 4, 5 trades in a specific day because of the magnitude of companies reporting earnings. There's a lot of stocks moving, and that's why earnings season is the bread and butter. We're going to come back to this chart in a second. What I also want to do is show you the other thing I do, which is give traders an opportunity to get my gap trade sent to them each and every morning at 9 a.m. Eastern Standard Time, 30 minutes before the market even opens for business. Today's email happened to show up a little late. Nevertheless, still 15 minutes before the open, plenty of time. We only had 3 possible gap trades on the board this morning, but today there was just a handful of companies reporting their earnings since it was the first day of earnings season. We had JP Morgan, Wells Fargo, a couple of other banks. Johnson & Johnson was moving, as you can see. It didn't hit our specific level, but Wells Fargo did. This was the one trade out of these 3 that hit the price level today. We just saw it on the screen. You see where I indicate gap lower, support levels are $53.63, and then I gave 2 secondary levels just in case the stock traded slightly lower. Stop and profit target is about 30 to 55 cents. These are minimum profit targets. This is where we want to make sure we lock in some gain and protect the rest of the trade, and we're able to take that ride higher when stocks like Wells Fargo today take that really good rip higher. You never know exactly when and which stocks you're going to get $1.50, $2.50, $3.50, or $4 gain out of in a matter of minutes. So we're back on the chart of Wells Fargo, and here's what I want to point out. Yesterday, the stock closed up at $56.02. The stock reported earnings this morning, and the stock was getting a little bit of a haircut at the opening bell. So as you can see, the stock started trading lower, came right into the $53.63 level, hitting it to the penny. You can see here the low of the day, $53.63 on the button. And look at this. By 11:20 in the morning, the stock made a high of $55.48. That's a tremendous gain off an entry of 53.63. $1.85 profit, or 3.5% in just over an hour worth of trading. That's a tremendous trade. These are scalp trades that can turn into day trades. Any day trader is ecstatic with that profit. And here's the thing, folks. Once traders understand the why behind this strategy, why it works, they have an entirely different outlook on their trading. They have a certain expectation of what's supposed to happen at these price levels. Once you see it work over and over and over again, you have an entirely different mindset when entering trades. And here's the other thing. It removes the guesswork away from trading. You gain a tremendous confidence level when entering these trades. And when you remove guesswork and add back in confidence, that changes your trading for the rest of your trading career. If you want to learn everything there is to know about how to trade these gaps successfully, come over to lazygaptrader.com, check out the course. You can learn everything you need to know, and you can do this each and every day for the remainder of your trading career. I'm David Frost, Lazy Gap Trader. Thanks for tuning in, folks.